Hello family, thank you for tuning into this video. Hey look, I'm going to do something a little different today. What I'm going to do is jump in and have a look at what are some of the cheapest suburbs in Rockhampton, and out of these cheap suburbs, where would I potentially invest? So these suburbs would range anywhere between sort of 300 up to around that $500,000 mark. So we're going to go through each suburb one by one and determine whether or not it is investment grade or somewhere I would consider parking my money. So I suppose if you're an investor, I think you're going to get some tremendous value out of this video. If you're a home buyer, you may get some insight, but I think this video is not for you. So I'm keen to dive in, guys, and let's have a look. All right, before we dive in, I'm just going to give the business a quick plug here. So my name is Troy Simbassini. I am the owner and head of research of Capricorn Life Buyers Agency. It is one of our subsidiary brands under the Life group of companies, and the Capricorn Life brand has a specific focus on central Queensland, and this includes Rockhampton, Mackay, and Bundaberg. And obviously you can include the sub-markets within that as well, which include Gladstone, Emerald, Yeppoon, Emu Park around the Capricorn coast, and then around the Mackay region you've got Early Beach and places like Serena as well. So those are our service areas, and basically all we do is provide buyers advocacy services or buyer representation to help them navigate these markets. So we've purchased more than $200 million worth of real estate here over the last 5 years, and we've generally helped struggling home buyers navigate the market. We've helped investors outperform the market and buy the better quality assets here, geographically challenged, and we've worked with also a lot of interstate buyers. So if you feel as though you do need some help navigating the market here and you want to lean on some local knowledge, feel free to reach out to myself and the team. You can find us on this number or this website. Visit us on our socials. We've got plenty of information there for us to connect and have an initial chat with us. Cheers, guys. Okay, now for the juicy stuff. Property data, the stuff that warms my heart and hopefully yours as well. So look, we've got the top 10 list here of the cheapest suburbs in Rockhampton, and it's basically an ascending order from cheapest to most expensive. And look, this is a total of 10 suburbs here, guys. But if you actually look at Rockhampton in terms of its overall suburb pool, there's roughly between 16 to 18 suburbs. So you can actually tell that Rockhampton overall is quite a cheap market when more than 50% of its suburbs are cheaper than $500,000. So look, what I want to do now is kind of go through each one by one and give a combination of, I suppose, qualitative and quantitative reasons as to why the price point is what it is and whether or not I would invest in that area with a budget between, let's say, 300,000 or 250 to $450,000, because that's the range of prices we have right now. So you can see here the cheapest one, Mount Morgan, has a median house price of 250, and the most expensive is Gracemere at 440,000. So let's assume here that I've got a budget that ranges between 250 to 450,000, and we'll determine where I will or will not invest, starting with Mount Morgan. So we can see here Mount Morgan has a median house price of $255,000, and it has a median rent of $347. So if you were to do some rough numbers and calculate its yield, it's definitely got a yield well around that 6%. So from a rental yield point of view, it's not a bad market. And I think if you are an investor that is interested in chasing cash flow and you have a rather low budget, like you don't have the ability to push up over that $270,000 mark, then I think Mount Morgan is definitely an area up for consideration. If you look at Mount Morgan historically, you can see here that over the last 10 years it's done 96%. Over the last 5 years it's done some pretty aggressive numbers around that 132,000. The last 3 years 94,000, and the last 1 year it's grown by 23%. And look, its median house price is currently $220,000. 55,000, and when you look at how much it's grown over the last few years, that just basically means that it's come off of a really low base. Because when you see those numbers, you're thinking, damn, wouldn't you think this house price would be a lot more? But that means it's coming off a low base. So the median house price only a couple of years ago, and I remember this, you could buy houses in Mount Morgan for around that, what, 50, 60, $70,000 mark. So they've really pushed up over the last couple of years, and I think that was a really good time to buy in Mount Morgan. If you could have bought back then cash, or if you're borrowing around that sort of 80, 90, 100 grand mark, you'd be basically what, a 300% increase now in terms of your return on capital, or 200% return on investment, and you would have done really well. Because look, I think Mount Morgan, as I said, it's probably one of those ones that's good for a higher rental yield, and because as an area, if you look at it, it's about 35 minutes out of Rockhampton. It's formerly a small gold town, or a gold mining town, and now the mines are redundant there. It actually bailed Australia out of national debt twice, and it's basically a sleepy little mining town now and doesn't really have a lot going for it. So going forward, like as a long-term proposition or proponent, like I probably wouldn't invest here, because I can't really see this median house price pushing more and more up above that sort of $300,000 mark, unless there is a reinvigoration of that town, unless a mine kicks off again, or unless there is a big employer come into the area and reinvigorate that economy. Because for now, I think it just doesn't have enough going for it for that median house price to kick on. But if you are investing and you have a lower budget, I think this is a potential market that you could go in and get some good yields. But I think the time for capital growth, the ship has sailed here, guys. Okay, look at the next suburb, Depot Hill. So Depot Hill is located in the inner south of Rockhampton. It is the closest suburb to, I'd probably say, the CBD. Only a couple of kilometres from the CBD. It basically fringes the industrial precinct of the Rockhampton CBD. So it has a median house price of $250,000 and median rent of around $363. So I'd probably say you're definitely in positive cash flow territory there as well, with a yield around that 6% or above. And as you can see here, over the last 10 years, it's done 60%. Over the last 5 years, it's done 92%. Over the last 3 years, 68%. Over the last 12 months, it's done 18%. And in the first quarter of this year, it's on the rise as well. Look, it's a tricky one for me. Depot Hill, despite the location, like it being very good fundamentally, it is an area that's been plagued by floods. So it's basically got a bad track record when it comes to being flood affected. It is one of the more areas that gets inundated when it comes to flood events in Rocky, and that really, I think, has plagued the suburb, and it's why it's really never got off the ground over the years, because it's really good fundamentally in terms of where it's located, but the only issue that it's in a low-lying area, and that low-lying area means that when the Fitzroy River floods, it spills over into that suburb. And in addition to that, like Depot Hill has been predominantly known as a more lower socio-economic area. A lot of older blue-collar families, a lot of public housing and social housing clustered in amongst there as well. So there is a lot of local stigma attached to living and buying in that area. A lot of people, particularly if you're middle class, upper middle class, or even if you're just a blue collar family that want to be in a more residential area, you're generally not looking at places like Depot Hill because of those reasons. But look, I suppose if you're an investor and you are chasing yields with a higher risk appetite, then you might consider somewhere like Depot Hill, because you just have to be mindful that it is a suburb highly affected by flood. But from a capital growth point of view, I can't see that pushing up in the long term any more than sort of 350 over the next 10 years. I think for the money you'll spend there around that 250 mark, you're probably better buying in somewhere like Mount Morgan, or even maybe an apartment of some sort on the Capricorn Coast if you're playing around with that sort of budget in this region, because I wouldn't be spending that money in this suburb. The next one is Rockhampton City. So the Rockhampton City is just basically the CBD area, and that's flanked by Depot Hill, as well as Wandle and as well as Allenstown and the Range. So it kind of intersects with a cross section of different suburbs. Look, you can see the Rockhampton City area, the median house price is $304,000 and the median rent is $367. Over the last 10 years, it's done 26% growth, so it hasn't done a lot in comparison to these other two suburbs previously. Over the last 5 years, it's done 49%. Over the last 3 years, 51%. Over the last 12 months, it's done 15%. In the first quarter of this year, it's on the rise at 2.6%. Hey, look, I think going back to this 10-year growth rate of 26%, that is very low, and it's actually the lowest on this list when you compare it to every other suburb on the list. And I think why that's been the case is that if you look at the Rockhampton City, it's quite a dead and dull place. It's not exactly a desirable place if you want to live there and buy. I think a lot of the people in Rockhampton, they opt to go out into the suburban areas as opposed to be clustered around the CBD, because actually there's no real advantage to even living close to the CBD in Rocky, because it takes anywhere between sort of 10 to 15 minutes from the furthest suburbs out to get into the CBD. So that commute factor into town isn't an issue. So there's not a whole lot of upside if you are to live around the city. And what's been clustered around the city is mainly industrial and high density living. So a lot of people don't want to have their houses sort of clustered amongst that. So you've got median and high density sort of townhouses and sky-rise apartments, and you've got some industrial and commercial areas as well, shops, cafes, retail precincts. So that sort of breaks up the Rockhampton CBD or city, and then you got residential property sort of spread out amongst all of that mess. And I think that's by and large what's withheld that particular suburb from performing over the long term, because just no one wants to live there. I think there is an opportunity for people to potentially buy and make money here, but I think the places you can make money in the CBD is targeting, I suppose, the fringe of where the retail is expanding, the fringe is where the median and high density is expanding, and maybe land bank, buy one of those properties that can be rezoned or is zoned for median or high density living, and then bank on that to potentially sell to a developer in the future, because Rockhampton will grow, and obviously that CBD is going to eventually expand, but I don't know when exactly. So I think maybe that is a strategy if you are looking to buy in this market with that budget. But I don't see a lot of upside when it comes to kind of long-term capital growth from like your general residential families, owner-occupiers driving up house prices there, because it's just not a desirable pocket of town where people want to live in terms of home ownership. But in saying that, when Rockhampton is full, and it's full right now in terms of limited vacancy rates, so the vacancy rates around that sort of 1% and under right now, obviously that puts upward pressure on rents in markets like this as well. And despite it being undesirable, if people got no other options, they're still going to rent around that area as well. So you do have a higher risk when you go into markets like this, particularly if there is a change in the overall rental vacancies. If rental vacancies spike in somewhere like Rocky, then a lot of the tenants that live around the CBD where they had no other choice before will opt to just sort of move out of those areas and go into the residential area. So that is a risk you'll potentially be exposed to if you bought something in this area and there is a change in vacancy rates. The next suburb is Bersa. So Bersa is located on the inner north side of Rockhampton. It's one of the biggest suburbs on the inner north, and you can see here the median house price is $321,000 and the median rent is $412,000. Over the last 10 years, it's done 42%. Over the last 5 years, it's done 75%. Over the last 3 years, it's done 48% growth. Over the last 12 months, it's done 12% growth. And over the first quarter of this year, it's on the rise as well at 2.2%. So Bersa, look guys, a couple of points I want to make about Bersa. Bersa, first and foremost, has a bit of a local stigma attached to it in terms of like it is an area known for its lower socioeconomic demographic. A lot of a lot of public housing and a lot of social housing sort of in certain pockets around Bersa that has really created that stigma amongst sort of the local market in Rocky. A lot of people don't necessarily want to live in and around where that clustering of social housing is, and that clustering is mainly around that sort of closer to what I would call Yamba Road or Musgrave Street, where Bersa is along Musgrave Street. That suburban area there, or that pocket, is where there is a higher concentration of your public housing, your social housing, your median density, your apartment and complex and townhouse living that also has a lot of that social and public housing there as well, and that's created that overall stigma. So you have to be mindful of that if you are investing in Bersa, that it is one of those areas historically that has been known for that. But in saying that, that is only one pocket of Bersa. Bersa has a bunch of other pockets that I think are investment grade in nature. I bought a couple of properties in Bersa on the right side of Musgrave Street that have the commercial or median density zoning, and these are larger blocks that range between sort of 700 to up to 1,000 square meters. I bought one in Bersa last year for $370,000 on 1,000 square meter block, zoned commercial, and it was right next to a commercial precinct that will eventually expand into that area. So it was a land banking strategy. So I think there is some good opportunity in Bersa if you were to target sort of those opportunities closer to sort of where Musgrave Street is, that sort of pocket of Bersa. But then outside of that pocket, you have to, I'd say, stay away from these areas where there is a clustering of social and public housing, because they're not the most desirable. They have a lot of issues there, I know, and the crime rate per capita in that pocket is very high. But Bersa has a bunch of other residential pockets, particularly around where Bersa State School is, or Bersa High School, no, Rockhampton North High School, and that sort of sits along Bersa Street. And then where Bersa intersects with Frenchville, there's actually some nice residential pockets there. And look, it's been a market that is also, in addition to it being so affordable, it's been one that's also gentrifying as well. So a lot of first home buyers have come into this market, and they've been snapping up these older Queenslanders or cottages that you could have bought 3, 4, 5 years ago now for around that $150,000, renovating them and turning them into quite nice sort of residential properties. And over the last couple of years, I've seen those $150,000 properties, or those $200,000 Queenslanders, now selling anywhere between sort of $350 to $450 and getting some really good bang for buck, because that yield, like this is the median here for the suburb, but there's properties renting around Bersa that are renting around that 500 to mid 500s even now, particularly the better quality Queenslanders. So these are like 3-bedroom, 1-bathroom Queenslanders that have that dual living upstairs and downstairs on roughly 600 square meter blocks. So I think Bersa is a suburb, that has a lot of upside potential, I think, for capital growth in the future. The best place for long-term capital growth, I think, for Bersa, if you can target where it intersects with Frenchville. There's a street called Diplock Street, and that is a suburb, that is a street of Bersa and Frenchville. So it actually runs through both of those suburbs. That invisible line separates the two. If you can buy around that part of Bersa, I think that's where the best long-term capital growth is, if you're not land banking and doing a similar thing to what I've done, buying around that Musgrave Street and banking on that sort of urban sprawl to expand. So I think that's where the two opportunities are in Bersa. And then if you are just chasing cash flow, I think you can buy anywhere in and around Bersa to get really good yields, but you just have to be mindful of capital growth, because I think there's only certain pockets in Bersa that will give you capital growth. Next up is Allenstown. So Allenstown, that's a south side suburb of Rockhampton, roughly 10 minutes, not even that, 7 minutes from the CBD. Look, guys, I don't mind Allenstown, but before I go into that, actually, we'll just have a look at its median house price. So $377,000, has a median rent of $384 right now. Over the last 10 years, it's done 40%. Over the last 5 years, 50%. Over the last 3 years, 28%. Over the last 12 months, 7.8%. Over the first quarter of this year, 1.3%. So just going back to my point around I don't mind Allenstown. The reason why I don't mind it is actually intersects with the range. So the Range is its neighbouring suburb, and the Range is actually one of the more upmarket areas of Rockhampton, one of the more premium suburbs. So Allenstown is more or less its cheaper bridesmaid suburb, they call it, because I think the Range's median house price is around that sort of high 500s, low 600s, and you look at Allenstown, which is its neighbouring suburb, it's the best part of 150 to 200,000 dollars cheaper, and that's where I think a lot of the upside in Allenstown is, particularly where Allenstown intersects with the Range, like that borderline between where the Range is in Allenstown. There's a couple of streets in and around there where basically that gentrification is spilling over now into Allenstown. I think if you can snap up a property, a cottage or a Queenslander, that's the majority of the stock there, because a lot of it is sort of post-war homes in there. So you're looking at 30, 40, 50-year-old homes. And if you can snap up one of those, I think that's where the best capital growth is if you are looking to invest there. So where Allenstown intersects with the Range, and where it also intersects with West Rockhampton, I don't mind that sort of pocket as well. It's quite leafy green, some really nice streets, and it is an area that's really starting to gentrify. There is some medium and high density residential areas, properties. There is some medium and high density properties in Allenstown as well as industrial and commercial. So you don't want to be sort of clustered around there if you're investing. But if you are, similar to what I said about Bersa, I would look at those residential properties that have the ability to knock down and develop in the future. So that land component that needs to have medium or high density zoning, so you can land bank for the future there and eventually sell your property to a developer, or go on and develop it yourself if that's the strategy. Because I think there is some larger blocks down there where there's properties sitting on these larger blocks that have that scope in the future, and I think that's where some good upside is in Allenstown as well for an investment of some sort. So that's what I'd be looking at, guys: the medium and high density zoning areas and buying a residential property that has that ability. And then I would be looking at opportunities in Allenstown where it intersects with the Range, because it's a bridesmaid suburb, and a lot of the Range people are getting priced out of the Range are now going into Allenstown, and where it intersects with the Range, I think that's the first area to sort of really push ahead. And I think that's where that's the pocket of the suburb that will outperform in the long term. Park Avenue. So Park Avenue is located on the inner north of Rockhampton. It intersects with a couple of suburbs. I think it's a neighbouring suburb to Bersa. It intersects with Norman Gardens, and it intersects with Kawana. So an inner north suburb, one of the largest suburbs as well on the inner north. It has a median house price of $377,000, median rent of $431. Over the last 10 years, it's done 45%. Over the last 5 years, 70%. Over the last 3 years, 47%. Over the last 12 months, 13%. And in the first quarter of this year, 2.2%. So look, Park Avenue, $377,000. So on a similar trajectory in terms of current median house price as Allenstown. Look, I don't mind Park Avenue, guys. If you are looking to invest for a combination of good cash flow and capital growth, and you're looking to spend that exact amount of money, like between sort of $350 to $450, I think Park Avenue offers a lot of good value for money. And the reason why I say that is because the two suburbs that it intersects with, it intersects with Norman Gardens, doesn't necessarily intersects with Frenchville, but it's very close to both of those suburbs. I think it's a great bridesmaid suburb, or a great alternative to those suburbs, Frenchville and Norman Gardens, because if you look at those suburbs, that's where I'd say the majority of the upper middle class live, and the median house price is reflective of that. The median house price in Norman Gardens is above that $500,000 mark, and so is Frenchville, or above that $500,000 mark as well, mid to high 500s. And you got Park Avenue, which is sort of well under that, the best part of almost $200,000 cheaper in some cases. And if you look at what Park Avenue has to offer, it's still clustered around some good schools. It's very close to the shopping centre. You're only a stone's throw from the CBD also. I think if you are investing here, I think there's some good opportunity in Park Avenue, particularly if you can buy in that residential pocket that's closer to Yamba Road. That's where I think majority of the better stock is in the Park Avenue suburb. The stock that's basically on the right side of Alexander Street, that's closer to the Fitzroy River, that's not the most desirable part of the suburb, and that's mainly industrial, and that's mainly an area that is flood prone as well. So you're paying high insurance premiums there as well. So if you're on the right side of Alexander Street, make sure you look that up. That's probably not the best part of Park Avenue. You want to get on the Yamba Road side of Park Avenue and try and be clustered in around that residential pocket, because that's actually has some really nice streets and has a lot of nice homes. In fact, you can still get in there like for a nice sort of 3-bedroom, 2-bathroom home. I'd probably say hardy plank home, brick base, for around that sort of $400,000 mark. And there are still heaps of properties also in there that haven't sold yet that could even sell for more than $500,000. Now, actually, we've seen a couple of sales already this year in Park Avenue where properties are now selling for around that $550,000 mark, because a lot of that sort of stock there hasn't really transacted over the years. So I think if you can get into that market, I think when the high end of that suburb starts to transact, the $550,000 properties start to sell more and more, it's going to drag up that median house price of Park Avenue. So if you're around that sort of $350,000, $400,000 buy, then I think over time, that high end of the market can slowly pull it up. But I think it's a really good suburb as a great alternative or bridesmaid suburb to Frenchville and Norman Gardens, because it basically offers the same thing in terms of location and amenity where you're close by. So I would consider that one, guys, for a combination of cash flow as well as capital growth. I think that's got a lot of potential there. And look, that's the median rent of $430, but if you look at the more recent figures online now, you're probably getting anywhere between sort of $500 to $550 per week now for a good standard dwelling in Park Avenue. But yeah, guys, that would be one I would certainly put on my shortlist if I was investing in Rocky. The next one is Kerngill. So Kerngill is also an inner northeast suburb of Rockhampton. It's got a median house price of $388,000 and a median rent of $425 per week. We can see here over the last 10 years, it's done close to 50% growth. Over the last 5 years, 71%. Over the last 3 years, 48%. Over the last 12 months, 13%. Over the first quarter of this year, 2.1%. So it's also on the rise for 2024. Look, Kerngill is an interesting one, guys. Similar to Depot Hill, it's been an area that's been plagued by previous flood events. It does come into the lower lying catchment of Rockhampton. So when the Fitzroy River does flood, certain parts of Kerngill do flood. So that's really hampered its ability to perform well over the long term. But in saying that, it's not as bad as Depot Hill. And even the houses that do flood around Kerngill, I'm not talking about like the water's not going over their roof. No, the water's coming sort of around ankle height or knee height around their homes. No houses are getting completely submerged in the suburb. So people who have bought there and continue to buy there know that and take that risk on, but their places aren't being submerged, that's for sure. Would I buy there at $388,000? Maybe. It depends. It depends on the type of property I can get in, the pocket of the suburb I can buy in. So Kerngill has a bunch of different pockets, and I think the best pocket of Kerngill is where it intersects with Frenchville. So Kerngill actually neighbours Frenchville, which is one of the more upmarket suburbs in Rockhampton, one of the more desirable residential areas. And I think where it intersects with Frenchville, I think that's a really advantageous or opportunistic area where you could get some really good capital growth. Like we bought a property in Kerngill last year, right on the borderline where Kerngill is and where Frenchville is, for $360,000. If they put that same property on the next street over in Frenchville, I would have paid an extra $100,000 more. But because it was a Kerngill suburb, I didn't pay that premium that I would buying in a place like Frenchville. So that's where I think the upside is that over time, people would see Kerngill as a bridesmaid suburb to Frenchville, particularly if you can target that area around Thoset Road, around Dean Street, that sort of pocket of Kerngill, I think, is where the best upside is. And look, I don't think you're going to have any trouble there, particularly if you're renting a property as well. I think it's still a well-located suburb enough, and and it's not a suburb that is predominantly known for lower socioeconomic demographic. It is a more blue collar suburb. So I think like long term, if you bought a property here and it was a buy and hold strategy, I think you'll basically have a tenant in there for life. I think over time, it might change hands a bit, but I don't think you'll have any issues when it comes to vacancy rates. So I would invest in Coongal around that price point, but only if I can get into that pocket that sort of flanks where Frenchville is, guys. So that's where I'd be buying. All right, the next suburb is Lakes Creek. So Lakes Creek is a neighbouring suburb to Coongal. So that's also on the inner northeast of Rockhampton. And look, it's not a big suburb, but Lakes Creek, yes, definitely sits close to the CBD, roughly around sort of 10 to 15 minutes from the CBD itself. But if we were to look at the numbers, so Lakes Creek has a median house price of $403,000, has a median rent of $388,000. Over the last 10 years, it's done 49%. Over the last 5 years, done 71%. Over the last 3 years, 48%. Over the last 12 months, 13%. The first quarter of this year, 2.1%. So it is a market on the rise, and it's been on the rise more aggressively over the last couple of years. Look, Coongal, would I invest in Coongal? Yes and no. So for me, Lakes Creek. Would I invest in Lakes Creek? The big issue when it comes to Lake Creek is that that turns a lot of local buyers off the area is the abattoir. So the abattoir is actually located in Lakes Creek, and a lot of people say this, and I haven't lived around Lakes Creek before, so I can't really speak to it, but when you're close to these big abattoirs, you get that smell that comes off the abattoirs, and it's not the most sort of appealing smell, or not the most pleasant smell. So a lot of people would rather not live close to those abattoirs, and yeah, you got that big sort of open paddock there as well, where they store a lot of the cows before they're taken into the abattoir around Lakes Creek. And if you look at Lakes Creek, there is only sort of 1, 2, or 3 residential pockets there. So it's not the biggest suburb in terms of the amount of dwellings there, but it is big in terms of the amount of available land, because they're factoring in that abattoir as well as sort of the holding yards for cattle. So look, that's probably one of the big issues when it comes to Lakes Creek is the abattoir, and I think that's really going to withhold it long term, like from really sort of shooting to really good heights, like that desirability and that sort of stigma attached to being close to the abattoir and that smell. But in saying that, if you want a property that is not your sort of cookie cutter 4-bedroom 2-bathroom or 3-bedroom 1-bathroom property on 600 square meters, you want something that's not cookie cutter, you go to Lakes Creek, because in Lakes Creek you can get properties that are like on an acre, you can get properties that are on 900 to 1,000 square meter blocks as well, and they offer something a bit unique in the marketplace. So if you want something a bit unique and you don't want to be a cookie cutter home, that's where I would invest, and that's the type of property I would buy in Lakes Creek, just to give me that edge, because people do like sometimes the rural residential living, or those properties on larger blocks where you can have chook pen at the back, boats, caravans, motorbikes, etc. And there's a couple of pockets around Lakes Creek that offers that as well. Where Lakes Creek State School is, you'll see those residential properties clustered around there. So if you could get your hands on one of them, I think you'll do all right there. Will you make $1 million? Probably not. But will you make money there? Definitely. And I think you'll always kind of have rental tenants there as well, given that that location is not too bad. But I think the turnover rate will be quite high. I think for residential tenants, if you are renting a property there, due to that, I think a lot of families after a while they get there and they start to get that ambience and get the smell of the abattoir, and they go nah, they move out. So I think you'd have a high turnover of tenants there, particularly if you are investing. But look, would I buy there? Yes, but only in certain pockets. But look, for that money, I'd probably spend it in Park Avenue or West Rockhampton or even Allenstown if I were to be buying in Rocky with that sort of budget. The next suburb is West Rockhampton. So West Rockhampton is obviously West Rockhampton. So that's located adjacent to the airport. And West Rockhampton actually intersects with what I said before, the range, and it intersects with Allenstown. So two kind of nicer suburbs of Rockhampton, and it has a median house price of $422,000, a median rental $440,000. Over the last 10 years, it's grown by 67%. Over the last 5 years, it's done 76%. Over the last 3 years, 54%. Over the last 12 months, 14%. And over the first quarter this year, 2.2%. So again, another suburb that's been on the rise, and it's had a pretty good run over the last couple of years. Look, I like West Rockhampton, and I've actually been buying a lot of investments there at the moment for clients. And the reason why I like it is because it intersects with the range, and the range is getting more and more expensive, and I think West Rockhampton is just positioning itself as another good bridesmaid suburb that offers plenty of value for money. So I've been buying like these older cottages in Queensland is where West Rockhampton intersects with the range, because if you actually drive around that part of where it intersects with the range, you'll actually see it's gentrifying there to the max. Every second, third house has been renovated, or there's scaffolds out the front where people are renovating, and you can see that sort of upmarket of area of the range started to now spill over into West Rockhampton, and it's a very fundamental area as well. Like, it sort of neighbours the wetlands area, and you can't really build out any more land there as well. So very good fundamentally. As with everything else, I probably forgot to mention that if you actually go through each one of these one by one, they're actually, except for Mount Morgan, they're all pretty good fundamentally as well in terms of like location wise. They're all quite good, but fundamentally, as in there's no new available land there, so it's all established dwelling, and you can't really have a land parcel there anymore where there's going to be a flood of 3, 4, 500 lots in the future in house and land packages that might sort of withhold capital growth and have heaps of competing properties for rent and to purchase, and that could really sort of drag down capital growth. So all of these suburbs are pretty good fundamentally, and that's what West Rockhampton has as well. And if you look at West Rockhampton, close to the grammar schools in Rocky, so very desirable schools, the Mater Hospital, the private hospital, the public hospital. So you're clustered around some really good public amenity there and job hubs, and that's what makes it really desirable. So West Rockhampton, I'm very bullish on West Rockhampton, and I think if you want to invest in Rockhampton, if you can buy where it intersects with the range, I think that's where you're going to get the outperforming result. But you're definitely going to make money there in West Rockhampton. I think West Rockhampton can really push up into that mid 500s over the next few years as well. So we're really banking on that for all the properties we're buying there at the moment with a sub $450,000 budget. All right, lucky last is Gracemere, coming in at number 10 with a median house price of $439,000. Oh, just quickly, for those that don't know where Gracemere is about 20 minutes outside of Rockhampton, so it would be considered a south side suburb of Rockhampton, or southwest suburb of Rockhampton. It's basically almost like its own small town, but it's classed as a suburb of Rockhampton. And you can see here, median house price of $439,000, median rental of $459,000. Over the last 10 years, it's done 41%. Over the last 5 years, 75%. Last 3 years, 46%. 12 months, 13%. The first quarter this year, 2.2%. Look, this is for full disclosure, I've never bought an investment property in Gracemere personally, and for any of my clients. And the reason why I haven't is because historically it's had a pretty bad track record. So Gracemere has been one of those suburbs that's been quite volatile in nature, by and large, because there's been an oversupply of housing there. And when there has been economic changes in terms of like changes in the economy where people have lost jobs, or people have moved out of the area because a mine has closed down or construction company has collapsed, what we found was Gracemere has always been kind of the suburb that first feels the grunt of that, because Gracemere, when Rocky's booming when Gracemere goes up, and when Rocky's booming when Gracemere has a vacancy rate under 1%, which it currently does. But the reason why I've never invested here personally is because of that track record, and because of that sort of poor fundamental around it being an area where there is a whole bunch of supply that can come on the market at any given time. And that's what's happened there in the past, is when Rockhampton did get very busy, a lot of developers went in there and absolutely smashed out new house and land packages or spec homes, investor stock, and flogged those off to investors. So a lot of people that built these properties for what, $450,000 are now 10 years later only just breaking even and selling those now. And that's a big risk, I think, you inherit if you are buying in somewhere like Gracemere, because the best time to buy there, I think, was when you could have purchased a lot of those properties when people were selling them at a loss. So people were building them for $450,000, but they were selling them like 3, 4, 5 years ago for $150,000, $200,000. So I think that was the best time to buy. And even then, like, it was too risky for me to buy there as well as clients. I didn't really sort of foresee what was going to happen in the future. But with the benefit of hindsight, like, the market's done all right now, but it was very hard to predict that at that point in time. I was just sort of relying on the track record of the suburb as a baseline to make my decision at the time. But look, the reason why I'm not buying there right now, even though the data is looking good, is because that fundamental around sort of that new supply pipeline. At any time can a developer come in there and smash out a whole bunch of house and land packages, and if they flood the market again, I think that could really slow down capital growth and also drag down those rental yields, because when you flood the market with supply, that obviously stops that rental growth from increasing over time and spikes that vacancy rate. And another reason why, and the reason why I don't like it, is because there's not a whole lot of diversity in terms of stock there. So there is a lot of sort of 4-bedroom, 2-bathroom, cookie cutter homes, spec homes that basically look identical from the street when you drive around in certain pockets. And I think that alone just doesn't create enough diversity to really push up that median house price over the long term. What you want is a diversity of stock and a diversity of demographic. And that diversity of demographic, I think, puts that upward pressure on house prices. When you compare like Gracemere, let's say, to somewhere like Parkhurst, which is very similar to Gracemere, it has a lot of new supply, new construction in the pipeline. But if you look at Parkhurst as a suburb, it has properties that sell for 1.2 million, 700,000, 800,000, 4-bedroom, 2-bathroom properties. But then you have properties that sell similar to Gracemere, around that 400,000 to 450, still in that suburb. But the reason why I prefer Parkhurst over Gracemere is because it has that diversity. In Gracemere, like, I don't think there's been a $1.2 million sale ever there. And if there was, it'd be like a 3-4 acre property or 10-hectare land parcel there. And I don't think there's even been sales around that sort of 600-700 there as well. And that's probably the issue that I have with it. I can't really see that market being dragged up by any that higher end pulling it up, because there's not a great diversity of stock in that market. And I think that's going to really withhold growth. And when everything's the same, what you then really rely on to push that market up over time is an imbalance between demand and supply. And I think Rockhampton, if it continues on the same trajectory, I think Gracemere could probably get to around 500,000, but pushing up any more above that, I think it's going to be very hard, because I still think you can get plenty more value for money in these other suburbs in Rockhampton as opposed to buying in Gracemere, because you're still 20 minutes out of town, you still have to commute for work, you still have to bring the kids into school, because there's no high schools out there. There is only a handful of daycares as well. So that's a big issue, and a lot of people, the second they get an opportunity to move into town in that suburb, they're moving into town to either buy or to rent. And that's a fact, because a lot of friends and family in the area do exactly that. So look, guys, it's just full disclosure. I've never invested in Gracemere, and I probably never will. But in saying that, like, it's done some pretty good things over the recent times, but you just have to be mindful of that track record and some of those poor fundamentals if you buy there. All right, guys, well, that's the 10 cheapest suburbs in Rockhampton, and basically my quantitative and quantitative analysis of it. Obviously, I didn't get to cover everything. Dive in and do your individual research on each suburb. Obviously, look at their days on market, their online search interest rate, their stock levels, and determine if it's still right for investing. You obviously want to look at that micro level data, but at the same time, also be considerate of those high level fundamentals and sort of qualitative aspects of that suburb there, and rather than looking at data in isolation of sort of the macro qualitative environment of that suburb, because I think when you can marry the qualitative and the quantitative together, that's where you get the best results. And often the qualitative stuff comes with having that local perspective. So lean on local knowledge, get as much information as out of locals or the agents you're prompting, and find out more qualitative stuff about the suburb. So yeah, guys, look, this is just sort of my own opinion. As I said, I do buy a lot of property in the area, and this is my own opinion. Obviously, go on and do your own individual research. Do not treat this as specific investment advice, guys, but I hope you got some value out of it. If you do have any questions pertaining to any of those suburbs, leave it a question in the comments, and we can circle back and get that sorted for you. Cheers, guys, and thank you for tuning in.